is up, everyone? Welcome to another This Week in Real Estate show. I'm Ray, and I'm your host, and we are live everywhere you can be live. I'm hearing it everywhere in my headphones. Did you hear the countdown music? It changed. If you're listening through Clubhouse, you heard the cool countdown music. We always go live on Clubhouse first. We're live and broadcasting there. We are also live and broadcasting on YouTube. And if you're joining us there, you can comment, and I could display your comment, and I could talk about you. There you go. Matt Lamarche saying AI agents sounds Canadian. Also, he's first today. Still celebrating the USA despite our loss last week. He said, I wonder who can comment the most today on YouTube. I have a feeling it's going to be Matt Lamarche. But he also popped over there on LinkedIn. That's right. We're broadcasting on LinkedIn where Matt Lamarche is also watching. And he's also over on Clubhouse, so he can add his voice to this conversation just anytime he wants to. Believe it or not. Steven Johnson checking in this week saying, still no magazine. If you missed last week's show, you should. What's up, Brooks Landry? He's over on Instagram. Now, I can't display the Instagram comments, but I can shout out your handle, just like Brooks Landry Group. Thank you for joining us over on Instagram, because we're also broadcasting there. We're pretty much everywhere that you could want to see a broadcast, even on Twitch. That's right. Even on Twitch. What's it worth? Appraiser Scamp said, Matt, shouldn't you be at the range working on hitting a ball straight? Ooh. And Olivier chimes in and says that your swing needs help, Matt. That's right. Well, welcome, everyone. We have a ton of news to talk about today. The real estate industry is changing. We're going to be talking about AI bots replacing agents. We're going to be talking about a huge scandal exposed in the real estate industry that involves Rocket Mortgage, allegedly, and some other news like that. So without wasting any time, let me just jump into the first bit of news, which is, let me see if I can find the sounder fast on this, because I think I may have gone the wrong way. Oh, man, I went the wrong way. Hang on. There it is. That's right. We have an update on the NAR settlement. So for those of you who are like, oh, maybe there's still a chance where NAR won't have to pay a bunch of money. Nope. NAR makes $179 million commission suit settlement payment. So I guess this is the first of many payments, but this is over on Inman. It says the National Association of Realtors has officially handed over nearly half of its monetary obligation under the settlement that aims to resolve antitrust claims brought by home sellers nationwide over the trade group's commission rules. Under the terms of the deal, NAR must pay $418 million total plus interest by February 2028 into an escrow account for the settlement fund to benefit the class of millions of home sellers across the country. I'm anxiously awaiting how much is each home seller going to get. What are your bets? Place it in the comments. How much of this settlement are people actually going to get? Tim says, good morning from Searcy, Matt. Hey, Searcy, Arkansas. What's up, Tim? Thanks for joining the call. Janet said $8. Oh, are you guys contributing to the goal thing? Is that what that looks like? Olivier sent $10. What is happening? I have no idea what that. Oh, that's how much. Oh, okay. Never mind. I asked the question stupidly, and then okay. So Janet said $8 is how much everyone's going to get. Olivier said $10. I just did this new thing over on YouTube, and this is what I thought was coming across. I'm stupid. I'm so stupid. I thought it said, as I started today, it was like, would you like to set a goal? And I was like, what is this? I don't know what this is. And so I clicked this button, and it said, set a goal, and tell people what you're going to do for the goal. I don't know what. So I'm like, all right. So I set this goal and said, if I hit this goal, I'll do a full behind the scenes walkthrough of how the show is made. I don't know. I don't know what that's going to do, to be honest. I have no idea how it is. All right. Living in Columbia, South Carolina. That's Courtney, right? Is that Courtney? She said $10K for the ones that took the stand and everyone else gets $300. Do you think it's going to be as high as $300? That's the highest we've had yet. Rebecca says, hi, Ray. I made it. Hey, Rebecca. Tim, it's good to see. I'm also in Arkansas. Tim, I'm glad you're here. Okay, so we have some great estimates here. I have no idea how much everyone's going to get paid, and I'm anxious to find out, especially if you're a client out there. You're one of my clients and you get paid. I'd love to know how much you're getting back from the suit versus how much the attorneys made. As expected, NAR has made its first payment due under the settlement agreement. Catchmark, the attorney said, asked where the payment was coming from and whether it was coming entirely from NAR's reserves. An NAR spokesperson declined to comment. We're complying with the terms of the settlement, it said. Man. Some of the settlement payout will come from NAR's reserve funds, including operating reserves and those that were collected from members, specifically for lobbying and to advertise the NAR brand. That's the fund they're using. So no more 3D logos for a while, guys. At NAR's annual conference, NAR NXT, in November, the NAR Executive Committee approved a motion that advocacy and consumer advertising campaign reserves, quote, be used to fund NAR's settlement obligations, and that the board designation for these funds be suspended for the duration of the settlement period. NAR declined to comment on how much of the payment was coming from each of the bucket of reserves. It's a good question. Where is the money coming from and what does the budget look like next? I guess they're moving that around. They have done quite a reduction. We talked about the reduction in the print media, which is why Stephen Johnson chimed in today and said, still no magazine. And if you're holding out home now, Stephen, you ain't going to get it. I'm just going to say, your broker has probably been getting your magazine, by the way, reading all of that. Okay. So there it is, the first payment. There's also what's the right word I should use for this? It's not upheaval. There is additional controversy for NAR. We talked about last week a new settlement lawsuit that was making its way through in a class action. What'd you say? Was that you, Andy?
Yeah, kerfuffle.
Yeah, kerfuffle. There's more kerfuffle to come. That's a great word. And we'll see how that plays out, because apparently it's another class action lawsuit that is for a different time period and maybe areas or locations. And so NAR is not out of the woodwork yet. Okay. And then we have some infighting still. Under pressure from NAR, Phoenix Realtors cuts MLS Choice. So the Arizona Association had been facing a loss of its charter after offering discounted non-realtor membership option that included MLS access. With the charter on the line, Phoenix Realtors has dropped the MLS Choice program, which allowed non-realtors to pay half the price of regular membership and access the MLS plus other products, including transaction forms. And this is we haven't really hit on this a lot. MLS access is not the only thing that some of the boards do. Some states have their own state forms. Some states don't. In Arkansas, there are no state forms. We call them state forms, but they're not a state form. It is a form produced by the Realtors Association. So the local ARA, Arkansas Realtors Association, is the one that produces the forms. So not only if you don't join Realtor do you lose access to the MLS, but maybe a bigger problem is that you lose access to the forms that have been worked through for years. And we have really great forms. So that would be most sad about that if I were to leave the MLS or leave the NAR. Our listings outperform the MLS by hundreds of thousands. So it's not a huge loss to not be listed in the MLS, but it is just inconvenient. The biggest part of not having access to the MLS is not looking at the properties of those. But I guess now you have like Zillow and stuff. So theoretically you could use that. Just the data is not as accurate. Anyway, the move brings Phoenix Association back into compliance with NAR's constitution and bylaws. And the NAR, the National Association of Realtors, said in a statement released today that it also ends the charter revocation proceedings NAR launched in December of 2024. This matter was never about MLS access, and NAR policy on this has not changed. NAR said in an announcement, MLS have local discretion to determine individual participation requirements when based on their market and applicable law. What Phoenix Realtors had to say, NAR's announcements included an unsigned statement from Phoenix Realtors that read, after working together productively, Phoenix Realtors and the National Association of Realtors have reached a mutually beneficial agreement that ensures Phoenix Realtors non-member offering complies with the NAR Constitution, bylaws, and three-way agreement, which requires real estate professionals to join local, state, and national associations. NAR provided a statement that also made clear that the Phoenix Association, quote, remains committed. It's the NAR provided a statement making clear that the Phoenix Association remains committed to the Realtor brand. This outcome supports both Phoenix Realtors and NAR's ultimate goal of helping Realtor members succeed. Succeed, not secede. They're not seceding from membership. They're succeeding with membership is the Oh, look at that. What's up, David? David Morales says, hola, Ray. Greetings from Guatemala. Hola, man. Thanks for joining. Multinational podcast from Canada, America, Guatemala. I think we're still 16 in like Tibet or something like that. Number 16 news show. What's up? Okay. Any comments on this? I thought Dusty, I don't know if she's going to be here today. She's got a conflict. She used to be on the show a lot, but she's got a regular conflict now. But she was the one who was talking about this in one of our contributor chats, but Hillary was the one that gave me this article. So thanks, Hillary, for dropping that in there. Okay. We have a huge scandal in the real estate industry, one that hardly anyone is talking about. And I would bet that you guys heard it here first from my good friend Scap. And I say friend in quotes because he's an appraiser. And you guys know how that goes. So
how dare you?
So Scap's been talking about this, kind of ringing the alarm bell for a long time. And it looks like there may be finally some action on this. And I'm going to cover this carefully because a lawsuit is not a guilty verdict. Okay. So I have to say that all this stuff that I'm about to go through is alleged. But it appears that if this comes out as it is stated in this article, that it could save consumers quite a bit of money on the appraisal fee, or at least pay appraisers appropriately for what they do. Okay, here's the article, and then Scap, stay tuned. I'm going to get Scap's opinion on this whole thing. AMC's deceptive fee skimming exposed in a lawsuit. Now, if you're like me, whenever you heard this article, you're like, what? What do movie theaters have to do with real estate? And then you remember, oh, okay, no, that's not it. It is what's the abbreviation? Appraisal. What is it?
Appraisal management companies.
That's it. Appraisal management companies. So Rocket Mortgage and the AMCs actively conceal fee skimming from borrowers, never disclosing the portion of the appraisal fee that is pocketed by the AMC rather than being paid to the appraisal. Okay. Brief. This is going to be really brief and probably will aggravate Scat because it won't be 100% accurate, but it's going to be a very brief synopsis on where we are and how we got here. Back in the day, lenders would order appraisals and they would pick an appraisal or two or three and say, hey guys, I have this house that needs to be appraised. Who can run out there and do it for me? And appraiser A is like, hey, I'm Johnny on the spot. I got this one for you. They would go out and do the appraisal, charge the bank for the appraisal. Sometimes it gets paid at closing costs. Sometimes it gets paid up front by the consumer. Otherwise, that's it, right? Well, then 2008-9 happened, and there was fraud in the mortgage industry. And this fraud had to do with subprime mortgages and et cetera, which you guys all know about the crash. In that, there were some also saying, well, part of this is an appraiser issue because these banks got these appraisers to appraise these things for what they wanted. There was no go-between or no one to check and say, why does this bank keep sending all of their appraisals to this guy who's appraising them above market when they shouldn't be? They should be rejecting these things because they're way overvalued on paper. So the solution that the government put in place was to have an appraisal management company. And this was to be a go-between between the lender and the appraiser. So now when the lender needs an appraiser to run out to the property, they contact an AMC, and the AMC puts it out as an order, and an appraiser picks up that order, does the work, sends it back to the AMC, who then sends it to the lender, or maybe sends it directly to the lender. But they're hired and paid by the AMC. The AMC collects the fee and distributes it. The problem is that the AMC fees are getting bigger, and the portion in which the AMC takes is getting bigger, and the portion in which the appraiser makes is getting smaller. So this class action suit is Timmins, Timmins versus Clear Capital et al. It was filed November 1st in Superior Court of California. And let's see, it sheds light on the deceptive and unfair business practice allegedly perpetrated by clearcapital.com Inc., Core Valuation Management, and Rocket Mortgage in relation to the appraisal fees charged borrowers in home transactions. So the complaint asserts the defendants engaged in deliberate scheme to misrepresent and inflate appraisal fees, which were significantly higher than the actual cost of the appraisal services rendered. This allowed the appraisal management company middlemen to line their pockets at the expense of unsuspecting consumers, according to the lawsuit. Rocket Mortgage mandates appraisals before closing on a home mortgage transaction and employs AMCs like Clear Capital and Core Valuation to hire appraisers. However, while Rocket Mortgage determines the appraisal fee that borrowers are required to pay at closing, the AMC retains a substantial portion of this fee for themselves, often 60 to 80% or more based on the recent research. Despite proving no tangible benefits or services to the borrower, the appraiser who actually performs the labor-intensive appraisal work, which includes visiting the property, conducting thorough market analysis, preparing the detailed appraisal report, et cetera, receives a pittance of the appraisal fee by the borrower. The lawsuit further highlights the lack of transparency from Rocket Mortgage, and the AMCs actively conceal the fee skimming from borrowers, never disclosing the portion of the appraisal fee that's pocketed by the AMC rather than being paid to the appraiser. The lawsuit cites, quote, damning research submitted to the Consumer Financial Protection Bureau, the CFPB, in August 2024 by the Appraisal Regulation Compliance Council, ARCC, which exposed the egregious practice of misallocating significant portions of appraisal fees across numerous states, including California. In some particularly outrageous cases, Clear Capital and Core Valuation Management retained as much as 84% of the appraisal fee. What? That's crazy. To compound the impropriety, the complaint asserts that AMCs actively prevent appraisers from disclosing their actual professional fees, deliberately keeping borrowers in the dark about the extent of which they are being fleeced. This legal action seeks not only restitution for the wronged borrowers, but also injunctive relief to put an end to the deceptive, unjust practices perpetrated by the defendants. So there you go. Here's the whole lawsuit. It is embedded into this webpage. The webpage we are on is appraiserblogs.com. And if you want to, you can read the whole filing. All right, Scap, you were the first one to bring this to my attention. And it seems like a year later, now something may be done about this. What is your take on this lawsuit?
I am jumping for joy. I hope the AMCs burn for this, because this has been going on for years. I mean, there's a lot more that goes into this. I mean, you explained a lot of it and you did a good job, so I'm not really pissed off at you for not explaining certain things. But I have a chart here that a lot of appraisers across the country jumped on board with this ARCC. I know the people that run this organization, and appraisers across the country were submitting all their documentation of what these fees were and what the AMC was actually keeping. You said something about the 84% that they kept. Clear Capital in North Carolina did. They charged the borrower $795 for an appraisal, and they only paid the appraiser $125. That's fact. There's
That's crazy.
No, well, yeah. I mean, and it's typically what really happened here is after the crash, Governor Cuomo actually put into place this thing called the Home Valuation Code of Conduct. He's the one that started this whole AMC thing to protect his lender brethren and everything. And what was put into the language was nobody knew how the AMC was to get paid. They would go out and they would solicit lenders and get them on board and sign a contract with them to manage their orders. But nobody knew how. They never said that the fees needed to be separated or how much an AMC would get per order to manage this process. So what they did was they just basically started throwing things out there to appraisers and say, hey, look, we got an order for you in your area. Can you do it for $300? Appraisers fought back, but we're not really getting anywhere. So you had a lot of appraisers that just started accepting these orders because you got to make money at some point. As time went on, the AMC started to get a little smarter, and somehow, somewhere, they came up with this thing called customary and reasonable fees. I don't even know what this. I don't even know what this means in any. Nobody else ever has this in any profession. But they came up with this thing, and
let me tell you this, Scott. You can't say customary and reasonable fees as a real estate agent because all commissions negotiable. And as soon as you say that, it goes against antitrust.
Well, in the appraisal profession, it's acceptable because the AMCs went out and started taking all this data that they had after manipulating what appraisers would take the orders for and basically started saying, hey, in this area, appraisers are accepting orders for $300 or $350 or whatever it might be. And they somehow magically came up with this whole thing of, hey, well, that's what's customary and reasonable if appraisers are accepting that. But at the time, that's all that was being offered. So appraisers had no choice. It was either take it or leave it at that point. So as things progressed, the AMCs, I guess, got a little smarter and they realized, oh, well, we can charge X amount. So you're a buyer and you're going to go buy a house and you're applying for a loan. And your lender tells you, oh, well, the fee is going to be $750 for the appraisal. And that's what you're thinking you're paying today because 10 years ago, you were paying $450 or $500 straight to the appraiser when he came to your door. Now you're paying $750. Okay. But what happens is nobody was saying that, what the appraiser was getting paid. So in the closing statements, when you're at your closing, you're seeing that fee in there, appraisal fee, $750. But what you didn't see was that the appraiser only got paid $300 out of that or $350 out of that $750, and the AMC kept the rest. So it's been fought, and we were fighting on this to get fees separated. What's interesting is that AMCs, to this day, tell appraisers in their engagement letter that you're not to send an invoice in to the AMC for the appraisal because they don't want anything documented. And you are not allowed, if you take this assignment, to discuss the fee that was paid for this with any of the borrowers. So doing a loan for somebody, if I'm out there doing an appraisal, I'm not allowed to tell them if they ask me, hey, I paid $750 for this. It better be good. I can't tell them, well, I'm only getting paid $350 because it's in the engagement. Like, you're not allowed to do that. That's what these AMCs were doing.
That's so suspicious.
So well, yeah, but as things went on, as time went on, fees started to go up because appraisers were fighting back a little bit. But still, to this day, these AMCs, the way that they kind of got around all this a little bit more was instead of just finding the most experienced appraiser in the area, somebody who covers your area and knows it and will actually do a good job on the appraisal because they're probably going to charge more, is they started this bid process where they would just bid it out to every appraisal on the panel that covered that area. So that you could get a guy that covers that area, but he lives an hour and a half away when you had somebody right in the neighborhood or somebody 10 minutes away that could do it. And they would bid it out. And basically what would happen is the cheapest appraiser who bid on it would actually get the order, and then the AMC would just keep the rest. So they already know they're getting $750, and they would bid it out and wait to see how many appraisers responded and who could do it the cheapest and fastest, accept that appraiser, and then take the rest of the money. And
so instead of bidding it out in a competitive market and then passing on the savings to the consumer, they were bidding it out in a competitive market and then taking the difference.
Yeah, exactly. And putting it in their pocket, saying, oh, well, that's the appraisal fee.
And the whole purpose of this originally was not to grift the appraisers. The whole purpose of this was just to have an arm's length transaction or an arm's length situation from the lender to the appraiser. But what it's happened is now why are they taking all this money? This is crazy.
Well, wait, Ray, it gets even worse though, because the whole point of the HVCC, which got rolled into Dodd-Frank, was to have that middleman to keep the lenders and appraisers from colluding, supposedly, to keep them from talking. The AMCs sign a contract and go out and get these lenders. They're constantly going out there and trying to sign lenders up saying, we can do this better, we can do this, sign a contract with us. And they do. Well, what happens is now that they have that contract, say you have a ABC lender and they're with UWM Mortgage. Now, UWM Mortgage is really big. I mean, they're gigantic. So you're going to get a lot of orders through them. If you don't keep them happy, what's going to happen? UWM is going to leave. Yeah. So guess where all that pressure from lender to appraiser went to? It went to the AMC, and the AMC is now the one that is going after the appraiser and telling them, oh, well, we need this stuff. Well, we need this one. Can you do this? Can you make this higher? Because we got to keep them happy. And if we can't keep them happy, then we got to kick you off the appraisal panel and find somebody who will. So it's just a big, flawed bullshit system that has been put into place. And I feel bad for a lot of these consumers because, in one case, and I'm just going to read it to you, and you're probably going to like, what the hell with this one, is that there was an AMC that charged a borrower, okay, what was it? It was, they charged a borrower $6,675 for an appraisal. Okay, I guess it's just some gigantic home up in Connecticut or whatever. They only paid the appraiser $3,000.
That's crazy.
So that AMC made a huge profit, but you're typically looking at AMCs keeping about 60 on average, about 60%. Now they're gonna say no. We some AMCs will say, oh, we only charge like $100.
Uh-oh, hang on, Scott.
Bullshit, in my opinion.
There you go. Sorry, I was interrupted by an ad on one of these things.
Oh, so it's just a racket, and I feel like these consumers need to know better where their money is going. I mean, hell, if you can save $350 buying a new house and put it for something else, that's great. But the problem is that these AMCs are so big now that they are the ones out there lobbying for laws and lobbying for things, and the appraisers really are just kind of stuck right now. But you're also seeing them turn to these new bifurcated hybrid products where they're charging, they have a third party person go out there, so they're paying even less for that, but you're paying full fee as a borrower. You're paying full fee for this appraisal, $600-700, and they're finding an Uber driver to come out and do the inspection for $50, and they're paying the appraiser like $150 to do a desktop appraisal based upon that info. So there's a lot of shenanigans going on, and these AMCs need to be held accountable. I mean, and lastly, I just want to let you know this. Maybe a lot of people don't know this. Rocket Mortgage owns their own AMC. Some of these lenders actually
Which one do they own? Do you know which one they own?
Yeah, they own AMROC, AMC. So they'll use other AMCs as well and send stuff out and use some other ones, but they have their own AMC. And guess what? Within that AMC they own, they hire their own staff appraisers, not independent appraisers. They hire their own staff appraisers to work for them to make things happen for them very cheaply to do so. So they're making more money.
We do not care.
It's kind of why
that seems like I mean, who does? This is frustrating. I hopefully this class action lawsuit even goes that direction, because it seems like everyone just kind of turns a blind eye to this kind of stuff. Hopefully they won't.
Well, it's kind of like It's the reason why I stopped doing lender work. It sucks because I have a lot of lenders that want to use me for stuff, but I just decline their orders all the time because when they come through the AMC, it's like, I just had one come through the other day on a $3.5 million house that's like 9,000 square feet. And they said, oh, you can do this for $450. And I'm like, no, my fee's a lot higher than that. And when I bid my fee that I would accept to do this job, they just totally declined me right away and found somebody and went to go find somebody else. But sometimes these orders, and this is why you have problems getting appraisals done on time, is because nobody's accepting these low fees. And they'll sit there in rotation for 1 or 2 weeks. And you're like, we got to close, but we don't have an appraisal. And it's because the AMC is trying to maximize their profits. And it's a shame, dude. It really is.
Yep. Right answer there. Tim says some of the banks were caught firing appraisers that didn't charge or value a property to their quote unquote standards. Ooh, I don't remember. That's wild. Yeah. Let's see. Rick.
It still happens. It still happens to this day.
Rick said my last rocket appraisal, $675 for the appraiser, $250 for the AMC, and $185 to take a picture of a handrail. Non-FHA loan for a total of $1,105. Wow. Adam Johnson says, I think every buyer should sue the banks for making them pay for an appraisal and not giving them ownership to it. I think that's absolutely fraudulent that the buyer should be able to take that appraisal to any bank they want. That is, so his, for those of you not in the industry T here, what he's saying, whenever a bank orders an appraisal, that appraisal is for the bank. It's not for the consumer. Now the consumer gets a copy of it and it said that, oh, this is to protect the consumer from going under contract against something that may be like wacky value. And then the bank gives the loan for it and then has to foreclose on them because it's a crazy situation. It's said that this is supposed to protect the borrower, but in reality, the bank is the one who requires the appraisal, and the appraisal is done for the bank on behalf of the borrower. You can't take that appraisal away from that bank. Let's say you change loans because something happens in underwriting and the underwriter says, oh, you have this special condition, you can't do it, you're going to have to go to some other lender or other situation. You can't take that appraisal with you and go to that other lender and say, hey, can you pick up right where we left off? Here's the appraisal, here's everything you got. Because the bank, quote unquote, owns that appraisal, even though the consumer is paying for it. That's an interesting point, Adam. If you pay for it, it should be yours.
It's kind of kooky the way it all works. I mean, it's always been this way, but what you were saying earlier about, with it's done for the lender, I'm just going to go back to the point of if we're supposed to help the lender, we're supposed to help them make a decision and protect them. How does having staff appraisers that work for your AMC, the lender owns, help anything? It doesn't. Those appraisers are going to make things happen for the people, for the lender that employs them. It's not like an independent appraiser, like myself, that doesn't work for an AMC or work for an AMC that a lender owns. I mean, the system is broken. I mean, it should revert back to the way it was. I mean, even though they want to blame them for inflating dice, the lenders should still put other things in place. There are portals, what we call portals out there, which are not run by AMCs, and they can order through there, and then the appraiser pays a slight fee to accept that order, which is perfectly fine if that's the case. But even a lot of these AMCs also charge the appraiser. So even though we're making less, if you think of AMCs also will charge, they'll pay me to do the appraisal, say, okay, Mark, you're signing the order for $400. But when you upload it to us, the appraiser who's doing all the work, have to pay like a $15 upload fee to upload this appraisal to the AMC. Yeah, I have to pay a junk fee to upload it. They pass along, they're choosing to use a certain platform to do their order assignments that they should be paying for, but they make me pay $15 to upload the appraisal.
Further reducing how much you're going to make from the appraisal. That's so stupid.
Exactly.
And I already know your opinion on this, Scap, but I'm going to read Adam's comment, but I don't want to get into it because I have to move on to the next article. But Adam says the vast majority of loans shouldn't even need appraisals, specifically loans that have a 10% down or more. and appraisals is an absolute waste of money and time. I know how you feel, Scott. We know. Scott's going to say, actually.
I think Adam should be kicked off this whole T-Wire podcast, never to be seen again.
But you know what? He basically he's saying a sentiment that a lot of people think. Like, if you're putting a huge chunk of money down, then come on, what's the need for the appraisal? 10% maybe.
No, you know,
I would say like 20%. Just do a desktop or have an AI bot do it.
I'm not against if you're putting a lot of money down and you have great credit and the value and everything seems to be there and it's not high risk. Okay, I get it. That's fine with me. But the majority of homes, or if you're in a cookie cutter neighborhood and have a ton of data or homes that have sold recently to kind of pinpoint it, fine. I'm okay with that. But I'm not okay with just like any house out there with acreage. I mean, certain homes do need to get an appraisal done because nobody can actually pinpoint what the hell the value is without doing deep research on it. So, yeah. I mean, I agree with them in some sense.
There you go. All right. We found some common ground there. Adam said, well, it's like a technology fee in a foreclosure, that little $15 upload fee you have. I think the technology fees on foreclosures are hilarious because it's the least technological scene, and yet they charge a technology fee. Speaking of technology and AI, let's talk about this next article. The first ever AI real estate agent generates $100 million in Portugal. $100 million in sales. So the headlines for this have been, there's been a variety of headlines for this. A lot of them have said things like AI real estate agent closes 100 million in sales. So I want to address this because we talk a lot about AI because I use AI daily. There are a lot of parts of the real estate transaction that I think AI can replace. However, I'm not so sure if it is a effective replacement in this case. And we're going to take a look at what it does. What it's really saying is that this AI real estate agent is not closing $100 million in sales. This AI real estate agent generated $100 million in leads that they've closed. So a real estate brokerage firm, Porta de Frente Christie's, has implemented eSelf's technology and has seen 100 million in sales based on leads that AI has generated. That's a very different headline. But the headline was AI agent closed $100 million in sales. That's not exactly what's happening. It talks about artificial intelligence. We're not fully the face. We're not only a face that's moving and speaking while the agent responds to the user, but we also have sharing video and image capabilities. Co-founder, CEO, eSelf's AI. His name is AI Alan Becker, told Fox Digital. Becker explained that eSelf's technology turns out large language models into a visual experience, comparing it to what movies did for books, making things more accessible, they say. Consumers can use eSelf's AI to generate customized AI bots that can be used for a wide range of applications, including customer service. So this is an example of what it looks like when you're taking a virtual tour with the AI agent. For the audio and podcast listeners, of which there are many of you, thank you for downloading and listening to that. It's like a picture of a living room. It's got a little hang up button as if you're FaceTiming, and then the AI bot is like a real person in the bottom right hand of the corner. And I guess they're talking you through the tour. I'm not sure exactly what they're doing, but I have a link, and you may have heard it come up as an ad earlier, but I have a link and we're going to try it to see if it'll even work for us. I'm not sure that it will because of all the other technology stuff I have. I think it tried to take over my phone earlier as I did it, even though I'm doing it on the computer. So, but we'll try it and see what happens in just a second. It says real estate brokerage firm has implemented eSelf's technology, has seen $100 million in sales based on the leads AI has generated. We have more than 5,000 properties currently in our portfolio. It's impossible for a physical person to know all of the information regarding these 5,000 properties, but it's not impossible for an AI agent to do so. I totally agree with that. So you as a consumer are going to get probably the most likely a much better service right away than you will have with a physical commercial consultant, because she knows, he's calling the AI the AI agent knows everything about the properties. Okay, when first interacting with the AI agent for Porta De Frente Christie's, customers will be asked for basic information, including desired city, budget, number of bedrooms. Oh, I'm not going to fill out the lead form for them, so we may not see this. Maybe we can, let me see if I can find an example. E-self is what it's called. Let's see if we can find an e-self. Examples of self. Nope. I want an example of literally. Search instead for e-self. I did not. E-self AI. All right, let's bring. It's a lot of words. I can tell they AI generated the website because it's just words. So many words. Back to all. Oh, it's a blog post. Team blog gets started. Okay, this is kind of an example. I'll share this screen. So all these videos down here at the bottom are AI generated. And well, I want you to create your own assistant. It speaks 30 languages. That would be rad. This is not an ad for them, by the way. I have no idea if they're good or bad. I'm just looking at it. Oh, she kind of looks a little fake, actually. That's interesting. I mean, that looks really, it's okay, but that looks kind of fake. All right, well, let's try it. Let me try to see on the, on this website here, if we can do, let's try one. I don't speak that language. And here's the beta version. All right, this may take over. I may have to exit, but you see the little AI person here? This is their AI lady. If I hit get ready, oh, it's coming up like a FaceTime call. It says click to allow or enable camera and microphone access. Yeah, see, I don't want you to have camera and microphone access. So that ended it. Well, that's interesting. Huh. I don't know if I'd want AI looking in my room when I'm on the call. Let's see if we can do it one more time and maybe fool it to oh, is it going to work? All right. Well, here's the little AI person to the left. Whoa. All right. So it did try to take over my phone. And I disconnected that. Yes, I would like to. Oh, see, it's wanting me now to respond to it. I don't know if you heard it, but it said, "Hey, this is Rachel. Would you like more information about this property?" And if I said yes, I assume then it would start whatever tour, but I have to respond to it, and it doesn't have access to my microphone. So that's what it looks like. You can have a conversation with an AI bot right on their website. What do you think? Is this a great use of this technology? Is this a lame use of this technology? What do you think? I'd love to hear your thoughts on it. Drop it in the comments, or if you're over in Clubhouse, tell me what your opinion is on this. Matt Lamar says, I'd wear a funny hat and speak with an accent if I worked for Zillow. What are y'all talking about? Y'all are having your own conversations about this. Tim said that, did you hear Zillow is calling realtors tour guides?
Yeah, that's what I meant.
What?
I probably go a little English, maybe a little stray, I'm not sure.
They're calling real estate agents tour guides? I didn't hear about this.
I mean, it's better than an Uber driver with an e-key, like Anna Abbott Marco says.
I'm going to find this. Hey, Tim, if you have that, send it to me. I can't find it with a quick search, but I know you can probably find it for me. I would love that link, because that's fascinating. I mean, they've kind of been turning us into that for years, so it's not surprising. Adam Johnson said, we all know how accurate real estate agent MLS information and county information is with these properties. I'm sure that's where the AI is scraping the information from. Yeah, that is a good point. The information in the MLS is only as good as the worst agent inputting information into the MLS. I mean, that's the sad reality of it. So, okay, so that's the first ever AI real estate agent. Drop it in the comments. What do you guys think? Are real estate agents going to kind of replace as the front end? Will AI real estate agents replace real estate agents in that context? Is that a great use? Is it a terrible use? What do you think? All right, let's look at the economy. We don't have that much time left. I'm going to try to be on it here. There is some good news for home buyers: slower price growth, more supply, and more bargaining power. I just had a conversation this week about one of the buyers that we're representing, and we submitted an offer on a property, and the seller didn't really respond like they wanted. And they said, "What do we do?" I was like, "Well, the house is still in the market. Submit another offer." And she was like, "Well, I don't know if they would take this." And she told me what number. I'm like, "Yeah, I think that's a great option. Let's do it." And the reason why, even though it's not exactly what the seller wants, I think the seller is realizing that they're lingering on the market. And there's a lot of sellers that may be lingering on the market, and they may not accept the first offer, if you go too hard or low. But if you give them something reasonable after that, they may very well accept it. Because we're seeing more and more properties sitting on the market, and that gives buyers a huge leg up on negotiation. So this article is on Redfin. It says home buyers have more total inventory to choose from. There are 5 months of supply, according to this article, on the market. That's up from 4.1 months of supply earlier this year, and the most since early 2019. That was before the pandy, y'all. Except weeks 4 ending January 26 when there were 5.1 months. Supply is piling up because listings are rising while pending home sales are falling. Buyers have more inventory to choose from too. New listings are up 4.2% year over year to their highest level for any comparable time period in 3 years. Buyers have more negotiating power. The typical home is selling for 2% less than asking price. That's the biggest discount in 2 years. Additionally, the typical home that sells is taking 57 days to go under contract. That's the longest span in 5 years. We talked a little bit about lingering days on market last week, but this is just some more data for you. So, good news for home buyers. If you want to buy a home this year, I think it's going to look much better for you. Adam Johnson says slower price growth and more bargaining power. I'm not sure how those two things are equal. We still have price growth, which means it's still a seller's market. Maybe not as it was, but it's still a seller's market. No, I think real estate always goes up, except for 2 10-year periods in history. Real estate always goes up because there's more and more people in the world, and there's the same amount of land. Except in Dubai, there's the same amount of land. In Dubai, they're creating land, which is wild. But I think for that reason alone, and our, my grandfather and dad, and I mean, they always said the real estate goes up. It always goes up, and it always has gone up because, the economy grows. There's more people. There's the same amount of land. It's just bound to go up. So it may not go up as much, but there is a certain amount of appreciation that real estate has every year, and price decreases are very rare. So as the prices are flattening out, and the days on market is getting longer, and the amount of inventory on the market starts to approach a satisfaction of current demand, that's where you have an advantage for a buyer versus a seller, because sellers then have to be more competitive. Adam Johnson says if houses are selling for less than asking and the average home sale price is increasing, that means there's still agents overpricing these things. Agents or sellers. It could be agents or sellers. There's a lot of sellers that want just a little more. But they're also being reasonable. If they're settling for, 98% of what the list price is, they're accepting offers that seem to be reasonable for where they're listed. I think in the mind of a lot of sellers, they're probably still looking at the last 3 years thinking, man, all I have to do is list my house and I'll get 100K over asking. It's just not true. So while agents are no longer accepting the aspirational sales prices that we once saw, I mean, that was wild when you had somebody like, you're like, nah, that's not going to happen. It's going to come down, 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 down. I don't think agents are accepting those much anymore, but it does seem like they're listing close to what the market is. I would say 2% is within reason.
Right. I think that conversation about how sellers feel about pricing I think there's a sentiment from buyers out there as well that feel that, well, I'm not going to put in an offer. This property is going to go way over. And that's just not the case. I mean, I shared a story about a property that I put on the market a couple of weeks ago, had only 2 offers. They were both under asking. The person owned the house for 30 years, and they said, well, the market's speaking to us, and went with an offer that was 89% of asking price. And then I mentioned that to another buyer, and they said, oh my gosh, we would have put an offer and we thought it was going to go way over. So, there's still a bit of a hangover phase here, but let's see, if I go back through my last listings, one had 2 offers, one had 2 offers, one had 3 offers, 2 had 1 offer. So, the offer, the showing activity is still high from what I'm seeing, and I'm pretty good at pricing to market. But the offer activity is way down. And I think that shows a little bit of skepticism on buyers thinking properties are going to go too high, and a lot of absorption that's taken place over the last 5 years.
Yeah, that's a great point. There may be a lot of buyers out there that are looking and saying, man, I wish we could afford that house. And then they see it once, it's new on the market, and they just assume it's sold. But if they followed up with it, they may find out that thing has not sold. But that is a great point. Homes are gaining in value still. So we have U.S. housing market as a whole gained $2.5 trillion in value in 2024. Wow. So here's 2 charts. One is a chart from, what's the start date on that? 2002. And it's just pretty much all up with a slight dip in 2008-9. And this is the total worth of U.S. real estate. And then it continues to track up in a stair step until the pandy. The pandy was a big shot up and down, up and down, up. Then we have the total worth, and you can see this huge downtrend in 2029, and then not 2029, I'm sorry, 2009. And then there was another little dip from 2011 and 12, and then it continued to go up and is now up 5.2% over the previous year. This is according to analysis of Redfin estimate for more than 98 million U.S. residential properties, December 31st, 2024. The percentage in terms of total U.S. housing market grew 5.2% year over year. It's the slowest growth in a calendar year since 2019. That was pre-pandy. And the second slowest since 2011. And this is why a lot of people are saying that this is leveling out and becoming more buyer friendly. This is also why a bunch of YouTubers are saying this is the next crash, that the housing market is going to crash and we will all burn and die. I mean, is Christina here? Christina Smallhorn is, maybe it's time to use fire again in the thumbnails. Well, maybe not. Maybe you have to kind of stretch a little further away from the whole California thing before you use fire in the thumbnails. But it's probably about that time, because get ready. All the YouTube bros are going to be out there talking about how the market's going to tank. It's coming. Let's see. This is the same article, different headline. Here's a different one. Mortgage rates dropped to the lowest level in 2 months, upping purchase power and giving homebuyers a window of opportunity. It's a brief window, but it's a window. Homebuyer on a $3,000 monthly budget can afford $446,000 home with a 6.9% mortgage. That's roughly the daily average on February of 21st. It's the lowest daily average mortgage rate since mid-December. The decline in rates gives homebuyers a bit more purchasing power. In the last 9 days alone, on a buyer with a $3,000 budget has gained $7,000 in purchasing power. Look at that. The buyer could have purchased a $439,000 home with a 7.1% rate on February 12th, and now they can afford a $446,000 home. And we've looked at these charts before. It's interesting. Total look at affordability another way. The monthly mortgage payment on a median priced U.S. home, which goes for roughly $420,000, is $2,760 with today's average rate. 2 weeks ago, the payment was $2,814. So almost $100 difference. No, I guess it's not. It's about $54 difference to be exact. Almost 100 was a drastically wrong quote. Tim said, we love Christina. We do love Christina. Matt says, tiny homes, tiny homes, tiny homes 3 times, trying to get her to appear. All right, there you go. House owners that have been waiting on the sidelines, hoping for rates to come down, may want to act quickly while rates are below 7%, said Redfin economic research lead Chin Zhao. The economic and political uncertainty in the air means that rates could easily rebound over 7% next week for the next month. The window of opportunity for buyers looks even brighter when you consider the supply of homes in the sale nationwide is piling up, giving some buyers power to negotiate on the on the sale price and terms. I mean, it's
do we really believe that inventory is piling up though when we have all these people rate locked into their houses?
It appears that it is, though. It appears that there are longer days on market.
Well, longer days on market, but that doesn't necessarily mean that the inventory is piling up. I mean, I think if the constraints were taken off of the inventory, like people would let go of their lower mortgages and move on, then we'd see the market crash in 5 minutes. Compared to what I see, a lot of people staying in their houses, adding on to or renovating or just living in their houses the way they are, and balancing out the market is going to save the market from a crash.
I see your sentiment, but I would second you and say, let's say everyone who's sitting in a 3% mortgage did list their property. I don't think it would crash the market because those people aren't just selling and leaving the country. They're selling and buying something. So generally, I think it would be even, but it would be a lot of activity. Who would love that, Jack? Real estate agents. Because last year was the lowest sales in 35 years. Real estate agents would really love if that were to happen because you would just be trading. People would be trading homes all around the country that way. I don't think they would be trading them and going to Canada.
More volume. And by the way, congratulations to Canada on winning the hockey cup.
Boo, boo, boo.
I'll give it to them.
I mean, we've never, haven't they won for like 24 years straight? So it's like no surprise. Okay. If we would have won that, it would have been a huge upset. They had the 3 best offensive players in the world currently as their offensive players. So yeah, I'm not surprised they won. It was a huge upset that we won the first time. We were just mad.
Yeah, agreed.
I'll give it where giving it is due. You know what though? No Canadian team has ever won the Super Bowl. So we still have that. All right, let's take a look at mortgage rates. There are people in the audience that quote just made really mad because I saw that posted on Facebook and there were so many commenters that like lit up. So I can't believe you would say that's so stupid. It's not even a right comparison. Guys, it's a joke. All right, mortgage rates dropped to the lowest level since mid-December, but demand still falls short. Mortgage interest rates dropped again last week, hitting the lowest level in 2 months. We talked a little bit about this already, but it decreased to 6.88% from 6.93%. Applications to refi a home, which had been surging through much of January, early February. Really? They fell 4% for the week, with 45% higher than the same week a year ago. Applications to purchase were flat and were 3% higher than the same week a year ago. So not huge movement on that. I think, until you get to like 6.5, I think people are going to be like, whoa, let's go. 6.5 is the new 5. We were like at 6 was the new 4. And this is funny too. I was talking with another client and they're purchasing a home and keeping their other home because they have such a low mortgage on their other home. And the home that they're purchasing, they're like, man, it's just such a high rate now. But they really want to move. And so they're going to do it. But they're just looking at the rate saying, no, golly, it's so high. Our other house is at 2%. And now we're here, at 7%. I think they'll be in the 6s. Like, this is kind of crazy. Yeah, they're close to 6. And I said, well, think of it this way. The historical average is 8. So you're still lower than average. I said, but I remember when my parents refied their house and got a 4% rate and we're like over the moon with a 4% rate. And they're like, yeah, but we're looking at 6. I was like, no, you're not. Your other home is sitting at 2. This home is going to be at 6. You add that together, it's 8. You divide it by the 2 houses, you're at 4. And they started laughing. Obviously, it's a joke, but they were like, you know what? That's not a bad way to look at it. It's about the same amount. And, yeah, okay. It's like we've got 2 4% loans. But I think that's what a lot of people are trying to do, is to buy another house, but keep their old one because the rate's so low, they can rent it out, make a little money. And there's a ton of people that want to be real estate investors, but it's a little scary to take that first jump and to buy your first investment property. But when you could just make your first investment property the old home you owned, and it's one and you know the problems, you know all about it, and you live there and you've had people work on it and you know who those people are, I think it's comforting to people to be able to do that. So I would expect more people to try to do that. All right. Typical buyer's down payment is 16%. That's higher than I thought it would be, to be honest. I thought it would be closer to like a 5% right now. But the typical buyer's down payment is 16% of the home's price. And the reason why I say this is just because I've seen so many people buy with FHA loans and fewer people buying in the luxury and high-end market. So I figured it would kind of tip that balance the other way. It did not. Typical home buyer puts down 16% of purchase price. There's a couple of good charts showing you that. The last time it was, let's see, the data in this report comes from Red Analysis across the 40 most popular metropolitan areas. That's interesting. The most popular metropolitan areas, I wonder what percentage of those people are buying with FHA versus conventional. And I wonder how that stacks up against other parts in the US that maybe aren't so affluent. The amount of money home buyers are putting down is higher than a year ago, mainly because home prices are up. High price means that buyers typically make a bigger deposit. The median US, whoa, I had interrupted that. The median, where was it? Wow, an ad just totally jumped in the middle of what I was reading. I have to find it. All right, the median US home price rose 6.3% year over year in December to roughly $428,000. That's not me clicking around on the page, by the way. That's the ad appearing and disappearing, making everything move. That's wild. All right, 31% of home buyers pay in cash. That's down from 34% a year ago. 15% of buyers who take out mortgage use FHA loans across these popular metros. FHA and VA loans. Let's see. And then it's got metro level highlights. So we'll avoid that part. We won't get into the weeds of it. Okay. There is a slight rise in housing starts. It sounded like Yoda. A slight rise in single family starts as economic uncertainty persists. So single family housing production should register a slight uptick in 2025 as builders contend with conflicting market conditions. Policy moves expected to aid the business climate in the areas of regulatory reform and extension of the 2017 tax cuts, coupled with tariff and immigration actions that could have a diverse impact on the cost. Basically saying these seem one's good, one's bad, one's good, one's bad, one's good, one's bad. What's going to happen? While economists are, that was the Ray phrase version of the economy with builders right now. While economists are speaking at the International Builder Show in Las Vegas today, cited those economic factors, other developments such as stubbornly high shelter inflammation, stubbornly high shelter inflation that accounts more for half of the increase in the overall consumer price index, and tight lending conditions for construction and development loans will continue to weigh heavily on the housing market in 2025. Robert Dietz is the chief economist at the National Association of Home Builders. Says with home builders and remodelers are dealing with the positive and negative risk in the months ahead. With shelter inflation, with shelter inflammation. Oh my gosh. With shelter inflation still rising at a 4.4% annual clip and housing shortage of roughly 1.5 million units, the best way to bend the rising house cost curve is for the Trump administration and Congress to enact policies that would allow builders to construct more attainable, more affordable housing. I have said it before. I'll say it again. I really wish they would approve some alternative models and alternative materials. And I think that's really the way to tackle both the housing cost and housing shortage. Then they go into a forecast and the value of homeownership, and it's all just kind of normal stuff that they would tell the press. But and we talked about this last week and 2 weeks ago, but I do want to reiterate that the tariffs on steel and aluminum do not drastically impact your single family build, which is made up of 1% to 0.5% steel and aluminum. And I did the math on it. On the average home price of $420,000, the price of the home could increase $1,000 or $500, which an agent looks at that and says, that's nothing. A consumer may look at that and say, wow, $1,000, that's kind of, we negotiate tens of thousands in differences, and a $500 increase for a tariff like that is that's nothing. So if a builder is telling you that they're going to have to raise the price 25% or 10% or something ridiculous, ask them how much of the home is built with steel and aluminum, because it just doesn't make sense. But I saw some early reports of people already doing that's crazy. All right. You know what else is interesting that's happening right now? I would say unexpected, is that the Florida condo prices are holding fast. Look at that. Florida housing market has been slowing amid skyrocketing insurance costs, intensifying natural disasters, and rising inventory. The state's condo market is enduring especially severe downturn after a new law led to a surge in HOA fees and special assessments. But there's one part of the state where condo prices are holding up relatively well: inland Florida. The median condo sale price in inland Florida rose 5.4% year over year on average in January. It did it. I'm sorry, guys. It did it again. The ads are bad. I need to put my ad blocker is on. Why is it? It's not catching it. It's just moving as I'm reading. Let's see. Compared with 4.8% decrease in Florida's Gulf Coast and 3% drop in the Atlantic coast, inland Florida condo prices rose even more than its single-family home prices, which climbed 3.7%. What's going on, Florida? Florida agents, drop in the comments what's happening on the inland condos. Why are those prices holding and the others are not? And you can see the Atlantic coast, Gulf Coast, and inland Florida, and you can see the differences where they're down everywhere else but there. Insurance is much cheaper inland on the coast. Well, that's part of it, I guess, which leads to lower HOA fees and more affordable monthly payments for condos. But isn't it less desirable? Inland, I mean, you're not on the beach. That's kind of isn't that the big benefit of Florida? The beach. I guess Disney, maybe, Universal Studios, give them their due too. They got the new Mario World thing happening. Many homeowners associations have been hiking fees and doling out hefty special assessments to comply with the new safety regulations. Orlando condo prices rise, but more slowly than before. And then I can't even scroll now because the ad. That's crazy. All right. Bye, Redfin. I'm going to a different website. Let's go to Broke Agent Media. I'm done with that ad. The advice for Realtor.com's chief economist gave to her neighbor about buying. I thought this was interesting. The Danielle Hale, the Realtors chief economist, was on Byron Lazine, Lisa Chinati, and Tim Toole's show/podcast. I don't know what it was. It was over on Broke Agent Media. And she talked about a conversation she had with her neighbor who lives in the DC Metro. Now, last week, we talked a little bit about the rumor on TikTok about the DC Metro and how everyone was saying, oh, it's terrible. All these homes are coming soon. The market's about to explode. And just how that totally was not true. There's about normal activity. There's normal listing activity. And you have more people moving to the area, more people moving out of the area. So there's just more people moving, but you have about the same activity that you always had. Anyway, Hale shared the conversation she had with her neighbor who lives in DC Metro and is hesitant about buying due to the uncertainty of the market. Hale's advice: if you find the right home, go for it. And her conversation gives some brilliant scripting points. I don't really like scripting points. It's just, she's an economist. She's not giving you a scripting point. She's telling you what's happening, and you as a real estate agent need to understand what's happening so you can also advise your clients. So let's not call like, here's what's happening in the economy a script. But I understand what broke agent media is doing. They're trying to help real estate agents, and it's just been called a script in our industry so much. Anyway, this is this is her quote. We're seeing inventory grow in many parts of the country, but not everywhere in the Northeast. We're still seeing it lag behind. We're seeing more building in the South and West. And also that's making a difference with inventory, and prices are determined by market forces, supply and demand. So if you have supply that outpaces demand, you're likely to see some more price softening. And the opposite is true where demand outpaces supply. You're going to see prices go up. She said, you want to look at national numbers to understand the broader context, but what really matters is what's happening in your market. And we're going to see some different trends depending on where people are already. When we look at our national numbers, we track inventory, more inventory than sales at Realtor.com. And what we have found is that prices have essentially already softened when we're looking at listings. And that's because we're seeing more listings that are smaller and those lower price points in geographies where real estate is generally more affordable. So there you go. Good point from Danielle Hill. She also talked a little bit about timing the purchase. She said, I think there are always reasons to be uncertain in the housing market. My advice to them is to keep their eyes open. I know their context and that they are ready for a bigger place. It's not absolutely essential, but they're ready for it. So my advice is keep your eyes open. When you see the home that's a good fit, go for it. There you go. From Danielle Hill, Chief Economist. All right, man, we crushed those last, how many articles? 1, 2, 3, 4, 5, 6, 7, 7, 8 articles. I mean, we did a great job getting through all that. So thanks everybody for joining me today. I appreciate it. I appreciate all the feedback from Facebook and YouTube, all the comments, the one LinkedIn comment, Matt Lamarche, great job. And Scap, thanks for adding your insight on the appraisal story, and we'll keep our eyes open for the resolution to that lawsuit. I'm wondering if they're going to have a settlement, if it's going to be big or not. I don't know. We'll see. All right, everybody. I will see you next week. Wow, we're already in March. Next week will be in March. Bye, everybody.